Hello everyone, welcome to our presentation and thanks for joining us today. My name is Alana Forbes, I'm the CFO at FLYHT Aerospace Solutions, and I'm also joined by Bill Tempany, our CEO. Bill, if you could advance the slides, we'll get going. So the typical disclaimer, we'll just skip on past that and have a look at the status of FLYHT at the moment. Our trailing 12 months of revenue as of September 30th, 2020 was 16 million. Our revenues in 2019 were a top line total of 21 million. So we have seen some impact from COVID, which we'll talk to you throughout the presentation. FLYHT's contracted backlog is currently sitting at 34 million. Our signed contracts are more in the $50 million range, but we regularly scrub this number with trying to look at what our customers' plans are and making sure we have an ideally a realistic number that we can be confident in to share with you all. Of our revenues, 55% are recurring SaaS revenues. That's been steadily increasing. In 2019, we were more in the high 40% range, and those recurring revenues carry margins of just over 65%. The good news about our system that we have installed on our customers' aircraft is it's really sticky. Once we install on a customer's aircraft, the only reason that we have customers leave us really is for receivership. And even in those cases, often the aircraft will go back to a lessor and the lessor will move it on to another operator who will oftentimes call us up and sign on for our services. We've been in the business for over 22 years in commercial aviation. Our equipment has been installed on just under 3 million flights and over 4 million flight hours. And what we've historically been doing is working with aircraft data. We're moving important and interesting data off of the aircraft, including data from the aircraft systems and weather systems. And our customers use that information in streamlining their operations, in saving money, and often in their safety operations. So why FLYHT? Why now? Aviation has definitely seen a significant impact from the pandemic, and our airline customers and FLYHT recognized that if we didn't change how we were doing business, if our airline customers didn't change how they were doing business, they would have a hard time emerging from the pandemic as strong as they had encountered it. And so FLYHT had a look and said, okay, how are we going to help our customers get through this pandemic situation? And where we've historically been looking at mainly aircraft and weather data, we pivoted our strategy to take a look at our customers' entire operations. And so we've had several of our customers step forward to be launch partners in this new strategy of ours. And we've been working in tandem with them to develop this new functionality. We have a large and diverse client base that we can access to help us develop this new functionality. We have, therefore, also multiple vectors for growth. We can upsell our existing customers when we've secured this development phase with our existing launch customers. And our goal throughout 2021 is to therefore uplist into a national U.S. exchange. So having just a top-level look at the airline industry, things were steadily increasing in terms of passenger volumes until COVID hit, and we really saw an impact, and our customers saw an impact in Q1. The trough for our recurring revenues as a result, we saw those in May. Throughout Q3, we started to see various recoveries. So the impact and the recovery has varied geographically. We have over 80 customers in about 40 countries. So they've been impacted and recovered at varying rates. Q4, so these pictures take you to the end of Q3. In Q4, the second wave, we did see another dip. but we're hoping to see some more recovery as we head through 2021 as vaccines become more widely available. Kind of a good news story in here to offset the impact to commercial aviation. While the majority of our customers are in commercial aviation, we do have approximately 20% of our customers in cargo. And cargo operators, while commercial aviation has really seen the largest hit, our cargo operators are adding aircraft to their fleet and they're increasing their flights. So that's been a bit of positivity to the diversity in our customer base. Okay, Bill's going to talk to you a little bit more about the aviation industry now. Bill?
Sorry, folks, I was on mute there. Yeah, the industry, as everybody knows, is a critical industry globally. The world doesn't go around without aviation anymore, and China has come back to nearly 100%. We have one customer in the former Soviet Union that's back to 100%. A lot of our carriers fly in northern Canada and Africa, where air travel is essential. It's not an option. So a lot of those customers have managed to maintain pretty steady volumes throughout the pandemic. There was a study done mid last year by the Air Transport Group of all of the airlines and what they saw coming out of the pandemic. One of the problems with the pandemic is you never know what the rules are. The government changes rules and travel restrictions and things that are outside the control of our customers. So it is a bit of a roller coaster ride, but the majority of the customers of the airlines that were surveyed said that roughly 70% of the money they intend to spend during the recovery is in digital transformation. That includes automation, the development of artificial intelligence, and being able to use digital tools to help them recover. They're also going to spend a lot of money on sustainability and the environmental concerns. It's interesting that in France and Germany, the government did bailouts for Lufthansa and Air France, ended up with equity stakes in doing so. And one of the requirements that they had before they put the money into those is that they would become more environmentally responsible. So one of our board members is a member of the Corsia group that's looking at air transport emissions and what's going on in the aviation world to reduce emissions from aircraft. And we have a really strong lead of anybody in the industry in being able to report those things. The other thing that 50% of the customers said is that they wanted to use innovation as part of their recovery tool. So they want to proactively optimize their operations so that they can do more with less. They're looking at changing their fleets from large wide-body aircraft to smaller aircraft. Airbus is one of our customers through a relationship with one of their providers, and we're seeing very strong sales in the A220 area, A320 area. The 737 is back in the air, and 737 orders seem to be picking up. So the smaller type aircraft that we have specialized in for 20 years are what's going to fuel the recovery of this industry. The management in the airlines is looking to have a very clear path to recovery, so they aren't being reactive, that they actually have a proactive and predictive approach to being able to look at their operations, get the right information to the right people at the right time, and use automation to help them recover from the pandemic. And it's an enterprise level initiative. One of the things with airlines in the 20 years I've been with the business has been that there's always multiple departments with different interests when they look at systems like ours. This mandate's coming from the top, from the CEO and the CFO, that we are going to do things differently coming out of this. They're going to stop departmentalizing data and departmentalizing systems and look at ways that they can get their airline back on its feet using tools that are available today and they don't have the people in-house to build those systems. So companies like ours have a real opportunity to participate in that growth. So the current business drivers for the airlines, they have to conserve cash. They want to use automation so that they can build a better business as they come out of this. They're looking for affordable technology, and they don't want to buy it from somebody that's trying to sell them other services. Being an independent data provider is a really big advantage as far as we're concerned and our customers are concerned. And the fact that we can help them save money without them having to spend money is really big. Most of the systems that we can put in place, we can do with existing data. And then to supercharge those savings, we need to get AFIRS on board so you can get real-time aircraft data. But we can show them savings that more than cover those costs before they need to put anything in. And this will allow them to maximize their profit from all of their assets. Some of the areas that we're looking at are irregular operations, fuel, the ability to manage their enterprise data in a smart way, how their operations work, how their maintenance works, and being able to integrate that data into a single view. So if you look at the worldwide airline operations, it's about an $800 billion spend. They spend about $267 billion on fuel and $533 billion on non-fuel. So what we've done is gone through with our customers and said, where's your biggest pain point? What is it that you need to improve so that you can take advantage of technology and take advantage of your existing infrastructure, existing people, existing fleets in order to reduce your costs? And we've come up with some real tangible measures of savings that we can drive for our airlines through the deployment of technology and the integration of their data. So if you look at the global fleet of commercial aircraft, there's about 40,000 aircraft out there today. In commercial aviation, there's about 25,000. We currently have about 3,000 installed and about 600 of those generating revenue for us today. Those 600 airlines that are generating revenue for us today are all very interested in expanding the capability using the tools that they already have. So we've got a captive market, as Alana mentioned, of aircraft to talk to, and the fleet is growing out there of smaller aircraft that we've got certification and ready to install on the long term, that we believe we can drive real value for the end users by taking advantage of the solutions we have. So if you look at the history of FLYHT, we started out doing basically a SATCOM system. We're currently the only SATCOM solution certified by Airbus on the A320, 220, and 330. It's an Iridium system that we sell through a partnership we have with L3Harris. We have the broadest aftermarket capabilities of approvals of anybody in the industry. We've got over 100 different aircraft types that we can install on, and those take a long time to put together. It takes anywhere from 6 months to a year to get an approval. We have approvals in China, in Europe, in Brazil, in Canada, in the United States. Most of the countries of the world will accept an approval from somebody that has approval in the country of origin of the aircraft. So we're in really good shape as far as approvals go, and we provide one of the highest quality solutions in the SATCOM business to customers around the world. We have been a leader in communication of real-time data for many years. Our customers have taken advantage of using the information that our systems collect and generate for nearly 20 years now. And we have a patent on triggered data streaming. There's a new regulation coming out called the timely recovery of data, where if an aircraft is lost, you have to be able to get the data quicker. There's a white paper that was produced with Boeing that states that we have a commercially available system that meets the requirements of the timely recovery of data. So we deliver that health data to the airlines today, and then they put it in systems that they use it for. And we have the broadest service available in being able to get that data both the cockpit data and the black box data to the airline to be able to do stuff with. What we're doing now is taking that data feed and moving it into what we call actionable intelligence. So we've built a technology called the JetBridge technology, which links the data from the aircraft to the airline data and the airport data, and then using learning engines such as Watson are telling the airlines what needs to be done and when it needs to be done so that we can reduce delays, give them real-time alerts on work that needs to be done or ground systems that haven't been performed or information that they need to improve the profitability, and capture more profit from their existing assets through leveraging the data that's available in various forms on these various systems. So the airline's three main areas of saving that they've identified for us is turnarounds. When an aircraft's on the ground, it's not making any money. If an aircraft isn't flying, it's losing money, it's costing money. So reducing ground delays, improving customer satisfaction, improving the utilization of their assets is really a big thing. And we believe we can drive a 1% profit for our airlines doing that. Irregular operations, giving them better visibility on what they have available for assets, improving customer satisfaction around snowstorms and travel delays, being able to reduce the costs of reassigning travel. There's another 0.5% that we can pick up there. And then fuel, if you follow the IATA recommendations for fuel and actually track that, the old saying of you can't manage what you can't measure, we measure it and we can give you the information so that you can make sure that everything's being followed so that you are, number one, reducing the cost of the fuel, but also reducing the emissions and following the CORSIA requirements. Another 0.5% you could pick up there. So if you used all of the flight tools, an aircraft operator used the flight tools on a 100 aircraft fleet over 3 years, they'd save $120 million in operating costs. The cost of equipping a fleet of 100 aircraft would be in the $5 million range, and that's where you get the 800% return on investment for an airline to get into using these technologies to improve their profitability. So we've got a phased approach that we're selling to the airlines. Phase one, you don't have to spend any money. There's immediate savings by getting your users to collaborate and get results delivered, to talk about what you can do to take action. The second phase of that, again, without any capital investment, is to make sure that you've got a single truth of data source so you know that you're all working with the same information so you can coordinate functions. You can get flexible messaging to the people that need it to take action, to do things that they need to do, and get our JetBridge technology integrated so you're integrating aircraft, airport, and airline data to be able to move into the next step, which is driving much bigger savings by getting real-time data on board, taking advantage of machine learning tools to be able to continuously improve your processes, and get a real-time feed from the aircraft and the airport to your in-house systems to drive the actions that are requested. So the bottom line is that the savings of $20 a flight on phase one and an additional $91 on phase two and an additional $100 on phase three, you're saving about $220 per flight for the investment of about an annual saving of about $40 million a year going to your bottom line. So one of the things that we've done over the years is built a really solid client base, as Alana mentioned, around the world. We've got 80 airlines in probably 40 or 50 countries. You'll notice that Europe is really lagging behind. We've got about a 2% market share. And one of the things we're looking at right now is some strategic relationships, maybe even mergers or acquisitions with some companies in Europe. It's really difficult for a North American company to sell to European airlines without having a European base. So it's one of the things that we're working on right now is to get a footprint in Europe and take advantage of the recovery with the tools we've got in the European market And we're hoping to have some answers to that in this year and some plans to move forward with that. So with that, I'll turn it back to Alana to talk about our financial results. So Alana, back to you.
Sure. Thanks, Bill. So here we have two pictures. On the left, we're looking at revenue, and on the right, gross margins. The picture on the left, 2020 is just showing 3 quarters. The others are obviously showing all 4 for those years. But it kind of paints a picture of how in 2020 we've been impacted by COVID. Prior to that, our SaaS revenues were growing steadily. And yes, we've been impacted in 2020, but we're still at a higher run rate than in 2018 and 2017. Looking at our gross margins, those we typically want to be in the 60% range, but they will completely, it totally depends on the mix in revenues. So if we're selling hardware, those come with lower margins so that we can get the hardware on the aircraft and then start that recurring revenue generating with those higher margins. And a look at our leadership team, the management team. I pulled an average, and we've been around on average for about 13 years at FLYHT. Bill's been involved since 2003. He tried to retire 5.5 years ago and moved into the chairman of the board position and just came back and rejoined us in June again as our CEO. I've been at FLYHT for 13 years. The first 10 were as the financial controller, so I know our systems inside and out, and the last 3 as the CFO. And then the 3 Ds, Derek, and Daryl. Derek Taylor has been with the company since 2002, so he's had a hand in most of the major programs that we've developed and produced revenue on since inception. Derek Graham has been most recently focusing on expanding our weather business. And Daryl Dean has been with us for 9 years, and he most recently joined the executive team in December. So it's good to have him back in that seat looking at our technology. Our board of directors, they have diverse backgrounds, lots of experience, and they're on the other end of the phone anytime we're looking for advice in their areas of specialty. Barry Eccleston is currently our executive chairman, and he was the former president and CEO of Airbus America. Jack Alcott is known anecdotally in the airline industry as the father of business aviation. Nina spent the majority of her career in fleet management. Brent offers expertise in the capital markets area. Mary McMillan, she's the most recent addition to our board of directors. She was the VP of safety at Inmarsat before she joined us, and she has a special interest in the area of environmental impact in the airline industry. Paul, Doug, and Mike, they've been with us, all 3 of them, almost since the beginning. There are 3 Canadian directors, and they offer various areas of expertise according to their history. And just turning back to our financials, you can see we've got our full year's results in the middle, our 9 months ended September 30th comparatives on the right-hand side. And you can really see the impact of COVID on our SaaS revenues. They've taken a hit, but they're still no slouch at $5.6 million for 3 quarters ending September 30th. The largest impact has been in the hardware side as customers and airlines are hesitant to invest in capital expenditures in this time of COVID, which is part of the reason for our pivot to actionable intelligence as we expand into areas where you don't need the hardware necessarily installed on the aircraft to derive benefit. Our good news story on the revenue side is in licensing. Our 9-month revenue in 2020 is higher than our full year for 2019. A higher gross margin, we saw that in our first 9 months of 2020 than the prior year. And we've been able to put in place a lot of cost constraints, access some government funding, and make some permanent changes to our cost structure, which you see in our G&A expenses. So the higher gross margin, the lower cost basis, all help to minimize the impact of COVID on our bottom line. And okay, next, Phil, please. So looking to the future of FLYHT, the strategic refocus in mid-2020 that we pivoted towards will be a real factor in FLYHT's success into the future. Our $34 million in backlog, that's near term. Those are mostly on 5-year contracts, and we expect to deliver within 2 to 2.5 years on most of that. We are forecasting to be cash generative starting in the second half of this year. And at the end of our last reported quarter, we had just under $8 million in liquidity. So Bill and I are here for another 15 minutes. Let's get into some questions if you have them.
Bill and Alana, thank you very much for a very, very informative presentation. I'm Joe Gomes, the Noble Analyst. We're going to start the Q&A session now. If you wish to ask a question, please click on the lower right corner of the video window. Bill, let's start off, if you wouldn't mind, kind of giving us, your perspective on the pace of recovery in the airline industry.
That's a very general question. The airline industry, you have to look at it in segments. And I think, the wide body, long haul aircraft, the flights to Europe, the flights to Japan or Southeast Asia are going to take a lot longer to recover than the narrow body, the flight from, Denver to Los Angeles to take your kids to Disneyland, and the Sunseekers. Being a Canadian, I really miss the fact that I'm going to be in Calgary all of this winter. That's not the normal plan. So the industry will recover differently geographically as well as based on the type of travel. We've got to get the vaccinations going. We've got to get the rules so the airlines know what they can and can't do before there's going to be a recovery. And I feel confident that that's underway. Whether it takes 3 months, 6 months, or 9 months, it depends on the efficiency of the government and the ability to deliver. But again, I think our client base being scattered around the world in areas like Africa and Northern Canada where it hasn't been a big impact, China where they're back to normal, I'm quite confident that we will see recovery in the smaller aircraft market in 21, not back to 2019 levels, but in 22 I expect to see the smaller aircraft coming back. But there's going to be a lot of changes to aviation through that period, adjustments to the problem.
Okay, thank you for that insight. The regulatory process, given that the flight products have already been approved by the regulatory agencies, does that provide you guys with a competitive advantage out there?
Absolutely. The AFIRS product is certified at 3 different levels. At the highest level, if you're going to interact with air traffic control and have communication with the pilots directly, there's 1 level of certification, which we have. It's called a TSO, and our box, we have a box that's TSO certified. The box is also, there's another version of it where you can have communication, non-safety services messages back and forth. And our STCs cover all 3 levels. We've got another product coming online this year called an aircraft interface device, which will give you Wi-Fi, 5G, 4G communication to get data off the aircraft and communicate with the crews. We've got new products that integrate the iPad or an EFB with the cockpit to get communications, and those are all certified.
Okay, and can you talk a little bit about the competitive environment? Who do you see when you're out there competing? What are your advantages over them? How competitive is the entire environment out there today?
Again, it's the standard fit from the major manufacturers, Airbus and Boeing, probably are 80% of the market today. China is starting to come on. Embraer's got a few, but the Airbus product, if you want to buy a certified SATCOM solution, it'll be a FLYHT solution. Boeing, we don't have a line fit on Boeing aircraft, but one of our customers just ordered their new aircraft with what's called provisions only, with an antenna and a tray, and our box mounts in that standard tray and is safety services certified. So there's companies out there that build SATCOM solutions. There's nobody out there today that builds a solution that does the data analysis and data transmission that we're doing today that allow us to do actionable intelligence.
Okay. Let me take one here from the audience. Can you discuss your roadmap for advancing your tech platform, both hardware and software?
Yeah, we've got product rolling out starting in the first quarter on our jet bridge technology. By end of second quarter, we expect to have all 3 of our launch clients up and running with some of the functionality. A lot of the technology roadmap depends on integration with their current systems for maintenance, for crew planning, for scheduling, flight planning, all of those things. So we started out with 3 launch customers to refine the product to be able to integrate with those systems. So at the end of second quarter, we expect to be able to take on more and more customers because they all use different systems for those things. Our hardware technology is because of COVID and the lack of demand for hardware, our True 28 system today, we can supply probably another 4,000 to 5,000 units between us and L3, and the demand for those isn't near as high as it was. So we're working on our AID platform as an interim step from a next generation AFIRS unit, which we'll look at as the recovery comes about and we see what kind of aircraft are going to be built and what the demand is.
Okay, maybe one here for Alana. Even in this downturn, you guys have done a good job conserving cash, steadying the balance sheet. If your business expectations deliver on plan, what kind of capital needs do you see in maybe the short term or in the medium term?
We don't foresee any need in the short and the medium term. We've made several changes to our cost structure. I mean, some of them naturally occurred, of course, due to COVID. Our travel budget decreased significantly, but we've really had our eyes on that, on our cash balances in particular throughout the COVID period, and we don't foresee any short to medium term need.
Okay.
At this time.
For current operations.
Yes.
Right.
Yeah. I mean, there's always opportunities that may arise in the future that may require some capital, and if so, we certainly pursue it. But current operations, we're good.
Okay. And Bill, you talked about the 3-phase implementation. So, kind of in your experience so far, when you look at the 3 phases, how long does it take for an airline to go from phase 1 to phase 3?
Is there a pilots union or not? One of our customers has got a pilots union, and it took us longer to get permission to get access to the data to compare flight plan to actual than it did to do the programming to deliver a solution. So it varies by customer, and it varies by which systems we're trying to integrate with and how friendly they are. The modern new systems for maintenance have an API to get the data that we need immediately. If they're using one of the really old maintenance systems, it can be quite a chore to get to the data we need. So it's somewhere between 3 and 6 months of work to get the integration done and working properly, and a bunch of factors outside of what we control.
Okay. We got time here for another question. from the audience, you know, with low trading volume and only one small bank following you, what are you doing to attract new investors in the United States?
Well, we're doing lots of things like this, talking to investors and trying to get the story out there. We're working with a couple of other people for coverage. We hired the FNKIR group last fall, and they're busy getting the word out. And part of our strategy is to get our share price and our market cap to a point where we can move to a U.S. exchange, as Alana said, and hopefully, as part of that, get some coverage that way.
Great. Bill and Alana, this has been very informative. We really appreciate you guys taking the time out of your busy day to present here at NobleCon17. We look forward to continue to track your story going forward. And again, thank you for taking the time. Have a great day.
Thank you.
Thank you.